India's top CEOs expect infra spending and demand creation to be the big theme of Budget 2022. While most view increasing raw material costs as a major obstacle to growth, those are some of the key findings of the CNBC TV18 Dhruva Advisors pre-budget CEO poll. Before we dive deeper into the survey, let me fill you in on the methodology. Now, this is a large sample. 2,800 people were polled across 22 industries. The poll was done online from the 19th of January to the 25th of January. Now, onto the findings of the report. A majority, 54% of CEOs expect growth to hover around the 7 to 8% mark this fiscal. 32% expect growth rate to be above 9%. As I was pointing out, 39% expect demand creation to be the major macroeconomic theme of the budget. 35% expect infra spending to get a major push. That, of course, has been a consistent theme of the previous budgets. Around 51% CEOs are expecting robust demand growth next fiscal, while 39% are expecting a slow pickup in demand. 76% of CEOs flag rising input costs as the key challenge for businesses. 37% of CEOs say the lack of skilled manpower is the big challenge, and 34% are worried about cash flow constraints. On the tax front, 48% CEOs expect direct tax rates to be rationalized. 32% expect personal tax reforms. That's not all. All 32% of CEOs are expecting long-term capital gains tax on listed securities to be abolished. 18% want a reduction in the surcharge on the super rich. Well, that's the wish list. How much of this is actually going to translate into reality is a different story altogether, and we will know more on the 1st of February when the Finance Minister unveils Budget 2022. Joining me now to discuss the findings are panelists Dinesh Kanabar, the CEO at Dhruva Advisors. Dhruva, of course, has been partnering with CNBC TV18 for the last few years to bring you this pre-budget CEO poll. Also with us, Niranjan Hiranandani, co-founder and MD of the Hiranandani Group, Sumant Sinha, Chairman and CEO of ReNew Power, and TV Mohandas Pai, Chairman of RN Capital. Gentlemen, appreciate you joining us here on the poll. Mr. Kanabar, let me start by asking you, this is a large sample. 2,800 people have been participants of this poll. One thing is very clear. They are optimistic and confident about the year ahead. They do believe that demand will be strong. But of course, the big ask of the government continues to be larger infrastructure spending.
Yes, indeed. And Shireen, one aspect which probably you didn't mention was the impact that people are seeing of technology. So people believe that technology is going to play a very, very major role as we go forward. People believe that 45% of the people polled believe that the single largest opportunity as well as challenge is technology. Clearly, people are looking at government spending increase on infrastructure. That to them is a very, very critical aspect, and that is not at all surprising at all. And again, when you go to tax, and again, I'm a little bit surprised that people want abolition of capital gains tax on securities. But I would think that people would normally want to expect a rationalization. People would want policies to be implemented. Because one of the other major findings, Shireen, was that while there is a political push to end the tax terrorism, on ground level, the reality seems to be a little bit different. So overall, not too many surprising things. From my perspective, the one thing which I found a bit surprising was that only 37% of the people felt that talent is going to be a challenge. The way we are seeing what we call as the great resignation and the people sort of moving on, I think that's one challenge. And the other is really, I don't think people have factored as yet, although people are talking about increase cost as being one of the issues, but really inflation is breathing down us, and inflation is something which people probably haven't factored as much as I thought they should have.
Yes, that is a big factor, and that is a concern that's being echoed across different sectors and across industry. Niranjan Hiranandani, let me come to you. 69% saying higher capex for infra is what they expect in terms of the key policy thrust as far as the budget is concerned. Given where we are at this point in time, it is an uneven recovery. It is a patchy recovery. The hope is that infrastructure spending by the government will fire the economy further. Where do you see things currently, and what would be the specific asks that you have of the budget to ensure that we continue to build on the current momentum?
Shireen, there is no alternative for India's GDP growth but for the fact that you need infrastructure, housing, education, and health to be a focus point beyond imagination. If you want a double-digit GDP growth, you have to have these sectors which really have to take off in a very big way. Otherwise, you're not going to lift the poorest of the poor from this, and the situation of unemployment which has hit so many sectors, including hospitality, travel, tourism, aviation, media, small business enterprises. If you're not going to thrust into development of great infrastructure in this country, housing in this country, education, health, these formats are essential to push the economy forward. So all this is necessary. And at the same time, we need incentives to be put across through sectors of the economy, rationalization of the taxes, definitely. You have commercial tax on corporate is 25%. Individual highest rate of tax is 42%. I can't understand this. Don't you expect individuals also to have the initiative to be able to make more money and be able to show more that part of it? I think a lot of rationalization on many factors.
Mr. Hiranandani, I don't know if this is going to be the budget that is going to bite the bullet as far as individual taxation is concerned, or looking at bringing down the highest tax slab. But, I want to pick up on one of the issues that you spoke of. And this is something that, one of my colleagues is picking up and reporting on, is the possibility of a salary support, employment support scheme for the unorganized workers, the urban poor, so to speak, in light of the fact that through the courses of the lockdowns, we've seen this exodus of migrant labor. So one aspect is the NREGS allocation, which is, of course, expected to be enhanced in this budget as well. But the other is, what do you do with the unorganized workers in urban cities? We don't know whether that is going to find its way into this budget. We are given to understand that this is a matter that's still under consideration. But do you believe the time has come for a scheme like that?
Yes, what you have Narega in the rural areas, I think you need in the urban areas too. We have almost 47% of India now moving into urban areas. And obviously the urban poor, the unemployed people in the urban areas do need the same support that is there in the rural areas, where they have lost jobs in the last 18 months and still not got back their jobs. Many of them as ferrywalas, small business enterprises, people are on the street. And I think time has come where some support in the urban areas also are required on the lines of Narega, so that we don't have people who are absolutely in difficulty in that sense. Yes, Shireen, you're right. They may not bring it this year, but I don't see why not. It is about time that this was being considered a long way to be done. But why not the tax rationalization? Don't you think that 42% is ridiculous rate, Shireen?
It doesn't matter, Mr. Hiranandani, what I think or what I feel. It will matter what the finance minister thinks and whether she has the ability to be able to deliver on your ask. But let me go across to Mohandas Pai. Mr. Pai, since we are bringing up the issue of taxation, let me address that issue with you in the context of one of the engines of growth which the government certainly seems to be batting for, and that is the startup ecosystem. Now, we've very recently seen the Prime Minister also host a sort of dialogue with the startup ecosystem. And there is a long list of asks that the ecosystem has put forward, especially on the tax front. Given the fact that this could be an employment driver, this could be a growth driver, what's your expectation? Could this be a startup budget?
Well, we hope it's going to be a startup budget, Shireen, because, startups have done very well. This 21 calendar year, we got $40 billion, 43 unicorns. This year, we already have 5 unicorns so far. I'm sure you know all the names. We may be getting $4 to $5 billion this month. So we are off to a great start despite market becoming low. What we want is rationalization of capital gains on unlisted stock so that more and more Indian money comes there. Right now, we have to pay 28% tax on long-term capital gains for unlisted stocks. So we want more Indian money. We're only getting 10% of total money from India. The rest is coming from overseas. We don't want to be a digital colony. And second, the stock option taxes. Today, many people have to pay stock options on exercise. And I think it's important for them to keep invested in unlisted companies. You can't have the same scheme of ESOP taxation for listed companies for unlisted companies. So we asked for deferment so that more and more young people can stick on. And like you saw on this survey, getting good people, human capital is a major challenge. And if people go on shifting job because they want more money, there is no hope to keep them in the business, it's not going to work. So we expect that. We had meetings with the government, we had meetings with Prime Minister, and I'm sure something will come out. We're very, very positive this year because the Prime Minister himself has taken a personal interest.
Yes, as I pointed out, the Prime Minister has met with leaders of the startup ecosystem. But, in terms of announcements that were previously made, commitments made by the government in the previous budget, for instance, on direct listing or enabling direct listing, we haven't seen the rules come out for that. Is there an expectation that that will perhaps get taken forward this time around?
Yes, Shireen, I don't understand what is holding it back. Because please remember, you can have unlimited FDI in startups into India. Then why can't you allow them to list outside and take the money when you're registered in India? I don't see anything. And today we also have that a listed company in India can go raise an ADR or something else overseas, right? So I don't know what is happening. There seems to be some confusion on taxation. I hope they call Dinesh Kanabar to ask him about the tax issues and classify it. I think it's a very simple issue. It should not be so complex. I just don't understand why they're not moving. I mean, they better be transparent and tell us, why are they not thinking? What is the problem? Maybe we can give them a solution. Because you can't imagine government to have all the answers, right? Dinesh probably has much better answers. You also have an answer. Yes, you also have an answer.
It's been more than a year. It's been a year, sir. We've all been waiting, but we don't know whether we are going to find the answers this time around or not. But Sumant Sinha, let me address the issue of the transition, to a greener, cleaner economy, and that is one of the thrust areas, one of the focus areas of the government. In fact, the Power Minister just yesterday saying that perhaps over the next fortnight or so, the government will unveil the contours of a new hydrogen policy. In the context of the move towards renewable and what the survey is telling us, what is your expectation come the 1st of February?
No, that's a tough question to answer because God alone knows what the finance minister will announce in the budget. But I think, look, obviously we all have expectations and wish lists, and I can tell you what those are. First of all, you're absolutely right. The National Green Hydrogen Policy is meant to be announced by the government in the next few days' time. This is something that the finance minister had talked about in the previous budget. So it's taken a year to get to this point, but as long as it's a robust, appropriate, sensible policy, which actually mandates the fact that people who use grey hydrogen today have to move towards at least a certain part of their consumption to green hydrogen. I think that would be a good step forward and, start converting India's gas economy and India's dirty hydrogen economy into really the green side. So I think that is going to be a very important thing. There are two or three other big areas. Number one, of course, is the whole issue of electric mobility. And how do you encourage more mobility coming in? How do you reduce GST further on electric vehicles and give that whole sector a thrust? And there are lots of benefits of that. Obviously, as we all know, pollution will come down, health costs will come down. So there are lots of attendant benefits. And I hope the government recognizes all that when they look at incentivizing mobility. The second area is batteries. Batteries is another big, huge area which has to develop along with mobility, along with renewable energy penetration into the economy. And therefore, we need to have customs duties on batteries come down. We need GST on batteries to come down to really get that sector kick-started and moving forward. The third area really is the whole issue of manufacturing, both in batteries as well as in solar photovoltaic cells. Now, there we've had the announcement of PLI schemes. We've all submitted bids, but the government has not yet announced the contours of what is going to happen. So we need some resolution, some early resolution on those areas. So like that, there are a few other areas as well, which I won't get into in terms of details. But all of those things ultimately the government is working on, whether they get announced in the budget or separately, I can't say. But the one big thing that the government does need to focus on is DISCOM reform. And that's an area which has been crying out for reform for a very long time. And we have to make sure that something happens on that front.
Well, that is a long pending and a controversial reform, and we haven't really seen much forward movement on that front. But Mr. Kanabar, let me come back to you and address two of the issues that Sumant Sinha raised. One, of course, is the issue of the PLI schemes. Now, last year we saw 13 PLI schemes being announced by the government. Many have in fact now been notified and are in various stages of implementation. But if I take a look at the poll, only 31% CEOs say that the PLI schemes will lead to fresh investments as of now. There still seems to be a situation of wait and watch as far as fresh investments are concerned. If we tie that in then to what the CEOs are saying in terms of capacity utilization in the next 2 quarters, 42% believe that capacity utilization of between 70 to 80% is likely. So how do you read the possibility of private capex picking up in light of what the CEOs are saying when it comes to PLI as well as capacity utilization?
So, Shirin, I am not surprised at the response that has come on PLI. The first couple of schemes of PLI which were launched were fairly intensive discussions with the industry players. What came out were no surprises. People came back to say, this is what we expect, and that's what was rolled out. The subsequent PLI schemes, so to say, have been a bit unilateral. And therefore, what has happened is that there are a lot of glitches out there. If you see many of the PLI schemes, you need to have a minimum turnover to qualify to apply for a scheme, and you need to be a bigger player again to qualify to get any money under the scheme. Now, that is not promoting fresh investment. And again, we have seen rejections happen for some small filing errors and whatever else. So I was hoping that the intensity with which participation happened in the first couple of PLI, the one for healthcare, the one for pharma, we would have continued through, and that would have been very, very welcome. Coming to the capacity utilization, indeed, we are seeing quite a few people talk about 70 to 80 to almost close to 100%. But again, sometimes polls tend to get biased towards people who are into those sectors where there is manufacturing, and maybe many of them are doing well. Equally, there are sectors which are not doing well. Equally, again, there are times if you ask MSME, and if MSME was carved out, we might have got a different answer to that.
Yeah.
But I do wish that the government does a sort of whatever it is required to make PLI really more impact, because I think it's a great scheme. Rather than provide subsidies, rather than do anything else, here you are putting money directly in the hands of the investors, and that's a great way to take things forward.
Yes, Mr. Pai, let me take that point across to you. As far as corporate taxes are concerned, I think there is consensus that the government has really done the heavy lifting by bringing down the corporate tax rate previously. And so there is not a lot of expectation on doing more there, perhaps just tweaking that period of 2023, giving another extension because of the pandemic for people to be able to start their businesses and so on and so forth. So what is the expectation from a corporate standpoint, as far as trying to spur growth and provide further fillip to the economy is concerned?
Well, Shirin, let me give you some data. The September quarter last year had record corporate profits. December had a bigger record. March had a bigger record. June had a bigger record. And this year, we are seeing that, the last year, from 20 onwards, and even now in this quarter, December quarter, we're seeing a record profit. So corporate profits are at an all-time record. And with lower tax rate, a lot of debt has been paid back. And now investment cycles are coming in because the debt equity has come down for the system, and the banks are able to lend money because the NPS are down. So everything is there. Now, what do you need? Now, we need 3 or 4 things. One, we need greater government spending on infrastructure, like, Hiranand said, that's important. Second, we need the real estate sector to have a little bit more incentives to clear out. For example, the GST on the real estate sector is very high for cities apart from Delhi and Bombay, where the land is very expensive, because real estate is a very important sector. And the third thing that we need is all the tax disputes have to be resolved and settled. Tax terrorism has to end. Because every time you do well, there's a tax dispute, they raise demand on you, that's come down, but the old disputes have to be settled, just like you settle the dispute about retrospective tax. And the last thing that you want is to make sure that all the refunds that are to be given for GST and for income tax are given on time. Income tax is being given on time. GST has to improve. Now they put in 53,000 crores to give back the old claims for exports. I think what we require is much more of housekeeping, much more of cleaning up, because the big issue about taxes have been taken care of, and 25% tax rate is fantastic. You've seen the impact itself, right? It changed corporate behavior. It changed behavior of the unlisted companies largely, because they're the ones who are now having more cash, and they become possibly that much more transparent.
Yeah, Mr. Hiranandani, to the point that Mr. Pai was making there in terms of providing a further fillip to real estate and housing specifically, what's the expectation this time around? You know, inflation, what is very clear through this poll that we've done and other surveys that we've done over the course of this month, rising input costs, rising inflation is the number one concern that CEOs have. They believe that that is the number one risk that threatens the economic recovery that we're currently in the midst of. How much of a challenge is that already?
Shireen, the cost in terms of steel, cement, other raw materials, goods, paints, labor, have all escalated from 5 to 20% in the last 1.5 years. So obviously the cost across the board is a challenge, and the prices of real estate have not proportionately increased. And this has affected the affordable segment more than the others. Second, I think now 75 to 85% of the people are taking home loans. And the figure of 2 lakhs of rupees as interest deduction is a historical 20-year story. And I think that needs to be uplifted to 5 lakhs in order to support people to buy their homes, which is actually anything between 5 years to 10 years salary. Though at this point of time, because salaries have gone up, but house prices have not gone up, Mr. Deepak Parekh has said that this is the first time affordability in terms of house buying is not a challenge, and home loans are available for most of the people. That is going to do. The third thing in the real estate sector is what Mr. Pai just mentioned. The GST is ridiculously high. 28% on cement, steel, and other commodities are very high, and you don't have input tax credit. So what is in reality, the home buyer is paying an absurd amount of tax for the purposes of GST without getting availment of the benefit of input credit. I think these changes are required to do in the housing sector. And there's one thing which I think Mr. Kanabar should clarify better than I can, is Section 43CA. If you buy a home which is lower than the ready reckoner rate or the circle rate or the jantri rate, you're penalized by a very, very high tax rate. Now, which means rationalization of rate of flats cannot take place, and the states are increasing the circle rates and other rates in order to collect more taxes and stamp duty.
Correct.
So on one side, you have the income tax department. So what has happened? How can you do such things? We have been representing, and I think 43CA and 50C need to be scrapped, but Dinesh can probably clarify better than I can.
Right, Mr. Kanabar, I'll get you to clarify on that, but I'll also get you to address the larger implications as far as direct tax is concerned. Now, 48% believe that there should be rate rationalization. 32% believe that there will be personal tax reform. What's your expectation? Because it really has been, the last few years, there's been a lot of hope that the government will move on that front, but nothing is materialized. Do you believe that this could be the budget that will address that issue?
I do hope so, Shirin. History has proved that when the rates are reasonable, people are prone to be very compliant. And when rates go beyond what is reasonable, particularly in a country where you don't have such a lot of social infrastructure being used for the people who are paying taxes, then people start finding ways and means of how to plan or do whatever else around it. And I think 43% rate of tax is indeed too high. I do think that there is a need to relook at it. Personally, I am aware that when it was a 35% rate of tax without the surcharges, taking it to 43, people were very, very prone to saying, we don't want to litigate, we don't want to take a stand which is going to take years to resolve. We are very comfortable paying the tax, no planning, nothing. Now, the moment people start looking at 43%, people start wondering, is this the right amount of cost to pay? Two other points, Shirin, if I could make. One is the point which Niranjan made with regard to deemed taxation. And that's not just with regard to 50C and all of that. It is also with regard to 56. So we have a situation where if any transaction happens at other than market price, that is deemed to be an income. And several representations have been made to the government to demonstrate the fallacies in these propositions. And very interestingly, when you meet with the government, you meet with the revenue secretary, you meet with others, they agree that yes, there is a degree of absurdity out there, but we are still not seeing really implementation of those. You're speaking to Mohan, and Mohan spoke about ESOP taxation. And again, that has been a proposition which has been repeatedly put through, that the issue is not about not taxing. The issue is about a point of time when the tax should be levied. Is it simply that when a share is vest that you should start charging taxes, or should you wait until the gains are realized? And that's not an unfair ask at all. So quite a few things which the government can do. One point, and that was with regard to the multiplicity and the years of time that it takes to resolve matters. Government has a direct taxes bill, which of course has not been implemented, but within that is a provision for continually resolving dispute. And I sincerely wish that FICCI, we have recommended this, and at least it had favorable years, that there is an ongoing mechanism within income tax where people can resolve dispute rather than having to carry it for 20 years to the Supreme Court.
Yes, dispute resolution has been a long-standing demand, and we've seen different versions of it being implemented in different budgets. The last one, of course, was the Vivad Se Vishwas scheme that the government had put forward. Sumant, Sinha, I'll give you the closing comment. The mood at this point in time is one of, you could call it cautious optimism, but optimism nevertheless. What do you believe, outside of inflation, will be some of the key risks to watch out for the economy?
I think the biggest risk actually is going to be what's happening globally. I think the Fed is going to be sucking out liquidity this year. And we've seen in the past as well, when that kind of thing happens, it causes disruption. All risk on assets tend to sell off. And I think emerging markets also would see that kind of outflow. And my concern to some extent is the fact that we've had a lot of capital going to a lot of startups in India right now. I hope that that funding continues, that this kind of reduction in liquidity globally does not have any impact in the Indian sector, because I think all of that has created these animal spirits. Every morning when you open a newspaper and you read about another, new unicorn that has been created at fantastic valuations and so on, it makes you at some level also feel that the economy is moving ahead, that things are happening. And so a reversal of some of those kinds of things will actually lead to the other feeling as well. So I think we need to just make sure that there isn't any adverse impact on account of capital outflows. I think that would be a big risk that I would point to. The second, of course, is political. We have elections coming up, which are pretty significant. If results there are adverse again to the central government, it may make them more cautious on economic reforms. And we can, in our economy, we need continuously reforms to keep happening because there's so much simply to be done all the time. So we need to make sure that the government has a very strong, sense of courage and whatever needs to be done. So they need to be operating from the front foot. So that is, I think, a second risk. A third risk really is that, there should not be any other COVID kind of wave that comes up. And a fourth really would be the whole issue of demand supply, of the supply side, cost inflation. And that should not feed into the economy and lead to some, quick reaction on the part of the RBI, and therefore interest rates going up, and therefore that beginning to suppress demand on the economy and bringing the economy down. So I think if you look at it, there are quite a few risks that are still out there. And so, yes, there is a sense of cautious optimism that the economy is going to do well, hopefully. But, we do have to be mindful of some of these issues that are out there as well.
Yes, we do have to be mindful of some of the risks that you've highlighted, and we will need to wait to see what the budget can do in order to nurture the animal spirits and foster growth. Dinesh Kanabar, Niranjan Hiranandani, Sumant Sinha and Mohandas Pai, always a pleasure. Many thanks for joining us here to take us through the highlights of the big budget CEO poll. We will, of course, know how much of what CEOs have asked for, have hoped for, and have wished for will translate into reality on the 1st of February. From all of us here, for now, goodbye. Thanks for watching.